Welcome to the Luca Ledger.
Welcome to the Luca Ledger with Brett C. Arnold, CPA and president of Luca Financial. Brett works with entrepreneurs and small business owners to help them understand their numbers, reduce unnecessary tax burdens, improve cash flow, and build more profitable businesses through strategic financial planning and fractional CFO guidance. I'm Evan Mack, and today we're talking about financial statements and what they're actually telling business owners and why so many companies make important decisions without fully understanding the numbers behind the business. Brett, my man, welcome back.
Hey, thanks, Evan. I appreciate it. I think today's episode will be really, really great for business owners.
Good stuff. Let's everybody listen up to Brett. So a lot of business owners only look at their numbers when something feels wrong. What are, financial statements actually supposed to help owners understand about their business, Brett?
Yeah, when we work with business owners, I think the most important part is that they're looking at their statements regularly. As long as you've got good data, it allows you to make good decisions. Too many times business owners are making decisions based on feelings or circumstances or as a reaction to a situation, but having data to make those decisions makes them much smarter moves.
So for a business owner trying to get more financially organized, which reports matter most to, maybe review more consistently?
Yeah, for a pretty consistent review, I would say a profit and loss is a good place to start. I know that financial statements can seem to be a little overwhelming if you've not lived in the world of accounting or finance and might not understand how those statements work together or what they're telling you. Profit and loss is a great place to start. It's a simple statement that explains the income or your revenue that came in and then your expenses that went out. And that's just a good place for you to kind of keep track and keep an eye on what things actually happened versus how you felt things happened.
What can a profit and loss statement reveal about, the way a business is operating beyond just whether it made money?
Yeah, so really important statement. A profit and loss statement is one that gives you a set of data over a specified period of time. So most of the time when you look at a profit and loss or a P&L, you're looking at it for a month, let's say. So for the month of May, I know that this much income came in and I spent this much on expenses. Where it can really help is when you can start to look at that as a trend. So I'm going to look at January through May and I'm going to look at it by month. So I can see I had in $20,000 in January, I brought in $25,000 in February, so on through May or June. The same thing for the expenses. And then you can start to take some mental notes to see, hey, revenue really increased in April. What did I do in April to help grow that number? Or vice versa, my expenses changed a lot from one month to the other based on whatever sort of circumstances might have happened. And that allows you, one, to understand what happened, so then you don't repeat it later on. Or if it was a good thing that happened, you can continue to drive a little bit more effort into those good things to help you for your future months as well. So I think that's a perfect way to read a P&L.
So Brett, a balance sheet tends to be, that report that people ignore the most. Why is it so important to understanding, the overall health of the company?
So balance sheet is probably, I would say probably my favorite financial statement because it really tells us everything in one picture. So when we're looking at a profit and loss statement, we're looking at a set of data in a set specific period of time. Like I said, let's look at income for 1 month and expenses for 1 month. A balance sheet, however, gives you a set of data that's accumulative from the beginning of time. So I know that my cash balance on May 31st of whatever year was $100,000. That's a cumulative number. So even if you run that statement from May 1st to May 31st, that balance is going to be whatever the balance was on that day. So that's the difference between a profit and loss and a balance sheet. The reason a balance sheet is important is because it helps you understand the health of the company. A profit and loss might tell you that you made income. So I had $100,000 in income, I had $50,000 of expenses, I made $50,000 for that period. But if you were to go look at the balance sheet, that's really going to tell you about the health of the company. Did you make income because you took on extra debt to go finance your operations? Or did you make income because you sold a lot of sales on accounts receivable and you don't even really have that cash yet? So your profit and loss looks good. Your balance sheet, not so good, because really all that matters is cash in the bank. Accounts receivable are great, but they're not helpful until you get that cash. So I like a balance sheet because it helps you understand how healthy your business is. And there's a lot to go into the balance sheet, but I really like that one once you can understand how to use it.
Where does cash flow fit into that bigger picture though? Why do profitable businesses still sometimes end up financially stressed out?
Yeah, huge component to owning a business. At one point or another, most likely if you're a business owner, you're going to experience some sort of cash crunch. And the first question we get asked a lot from our clients is, but I had revenue, I had net income, where's all my cash?
Mm,
And until you're in a cash crunch, you don't understand how important cash is. The old saying, cash is king, is very true when you're operating a business because if you're fully leveraged and you've tapped out all your lines of credit, your credit cards, the bank isn't going to give you any more money, and payroll is due on Friday, a really good profit and loss statement doesn't help you in that situation. You've got to have cash in the bank. So being able to understand how your cash flow works is very important. Example I gave earlier, if I've got a sale that I made on accounts receivable, I went and sold something for $100,000 and I told the person, hey, pay me within 30 days. The sale is great, but it's not helpful for my bank account until I get that cash in the door. That's why understanding your cash flow, I would say, is even more important. Revenue does not equal cash flow when we're a business owner. So being able to understand when cash is coming in the door based on receivables or when cash is exiting the door. So I've got payroll, I've got trade payables, accounts payable, credit card bill, whatever it might be. Being able to understand the flow of how that works and plan for any dips in that cash flow will really help a business owner be able to make smarter decisions.
mm. What are some of the financial patterns that usually signal deeper operational issues inside of business, Brett?
Constant cash flow crunches. So we work with hundreds of clients, and we've built a proprietary cash flow dashboard that we build out for a lot of our clients, depending on your service level, and that gives a client a real-time view of what their true cash number is. And what I mean by that is whatever is in your bank account is not your true cash number as a business owner. So your bank account might say that you've got $100,000 in there, but you've got payroll coming out in 3 days, and then you've got your credit card bill coming out in 5 days. Those combined, let's say they're about 80 grand. So then as your CFO or your accountant, we want you, the business owner, to understand my bank says I have $100,000, but by Friday, I'm only going to have $20,000. So I need to be making decisions based on that $20,000, not on the $100,000 that I'm seeing in my account today. So being able to understand how that works will help keep you out of a cash crunch. But when we constantly see clients in cash crunches, those are hard holes to dig out of. One of the only points of relief when you're in a cash crunch for a lot of business owners is unfortunately they're going to go take out hard money loans. These are loans that they're getting at 45, 50% interest. And it's hard to claw your way out of that. So you've got to be able to foreshadow by using your cash flow tools when you might get in one of those situations so you can make some decisions. Example decision might be, I've got that accounts payable bill due or that credit card bill due on Friday. However, I don't have cash to do that. So I'm going to borrow against that number, meaning I'm going to make my minimum payment that I can to help get me into next week when I might have an accounts receivable coming in or somebody's going to pay a big invoice. Those aren't decisions that we want to have to make, but they're helpful when we're planning for cash. Because like I said, if you don't have cash, your business is not going to operate for very long.
Mm. So, Brett, how often do you see business owners making these big decisions like the hiring, expansion, or pricing based on more, on instinct than actual financial visibility?
Every day. I'm a business owner. I do the same thing. You have these instincts telling you to make decisions. It's one of the things that's probably the most difficult to do is to pause, even as individuals who are doing our own budgeting or business owners as alike. Pause and look at the data because sometimes pausing and looking at the data is not going to give you the answer that you want. But when you're a business owner, you can take some risks to know, hey, I need to make this hire. I know it's going to get me to X, Y, and Z. And there are calculated risks that typically can pay off. But too often do we see business owners making decisions based on instinct. That's why if we've got good up-to-date data, we can, yes, use our business owner instinct because I think a lot of entrepreneurs have that. But when you can couple that with good data, it allows you to make much smarter decisions.
Mm. Can you share an example where better financial reporting completely changed the way a business owner approached growth or decision making?
Yeah, absolutely. So there's a perfect example I like to share of a client that we had out of Houston. We started working with this client. I think it was kind of like mid-COVID time,
Mm.
and the client approached us, and they had actually grown a pretty healthy business. And they said, "Hey, I don't know what's going on, but I'm making money. I'm sending out more and more invoices every month, but my bank balance is getting smaller and smaller." So they didn't really have any sort of accounting software set up. They weren't tracking things. They were running their business based on their bank account. Pretty common for new businesses to do this. I think they had been in business for about a year at this point, which is a little long to not have an accounting system set up. But we connected, and I said, well, first things first is I need to get some trends in place so I can give you some answers. So we got her set up. We used QuickBooks. That's kind of our preferred accounting system. We used QuickBooks, got her set up, and I was able to validate her feelings. I said, "Hey, let's look at the first 8 months of the year." I think this was in September is when we connected. You were correct. Your top line revenue, meaning the invoices that you're sending out to your clients, that is growing every single month, and it's growing at a decent pace. However, you've got some costs that are outpacing that revenue growth. The main cost is labor. So she had both employees and contractors. So as she was signing new engagements with new clients, she was also hiring more help. She was hiring faster than she was engaging with new clients. Again, it's that instinct. It's not based on data. So that kind of opened her eyes, and she said, I had this instinct or this feeling that my labor costs were maybe getting out of control. I was feeling like I might have had too many people working for me. I was feeling like the contractors and the employees that I had hired maybe didn't have enough work to do, like maybe I had overhired. And then I was feeling that maybe some folks weren't really being as efficient as I would have been if I were putting the engagement together. So we validated our feelings on income and revenue. And then we said, hey, your costs are outpacing that number. This is why your bank account balance is getting smaller and smaller at the end of every month. What that did, that gave her the freedom to go make some decisions that sometimes we as business owners don't like to make, but she had the data to go make those decisions. It was no longer based on feeling. Hey, I've got to cut costs, and the place I need to cut them is in labor. We need to make our team more efficient. So it became less of an exercise in ambiguity where like, I'm going to cut you because I think you're not performing well, to I'm going to cut you because our budget doesn't support it anymore.
Mm. So then, Brett, what separates business owners who truly understand their numbers to the ones that constantly feel, financially reactive?
Yeah. I think this is a really hard part of being a business owner or an entrepreneur is being able to understand the number side of things. So often entrepreneurs get into the business because maybe they're really good at a skill or a trade, or they're a really good people person, but not necessarily because they're good at accounting and finance. So that's why we have a company, is to help these business owners be able to understand their numbers. I love the concept of being able to educate and empower our clients. It's one of our mission and values that we have here at Luca Financial. Is not only do we just want to get your accounting clean and up to date and present you financial statements, but we also want to teach you as a business owner how to read those financial statements. So you're going to meet with us once a month, and we'll review things together. However, you need to be able to look at a profit and loss statement at any time and understand what it's telling you. You don't need to get into the nitty gritty and understand how debits and credits work and accounts receivable and payable and how they're connected to different statements. I just want a business owner to understand high level, what is my financial statement telling me? What are some key metrics I need to be looking at, or triggers I need to be looking at in order to start making these decisions?
Wow, that's good stuff. Brad, good information. Appreciate the time.
Thank you, sir. I appreciate it, Evan.
All right. That's it for today's episode of the Luca Ledger with Brett Arnold. If you'd like to learn more about strategic tax planning, fractional CFO services, or building a stronger financial foundation for your business, visit luca-fs.com. Thank you for listening, and don't forget to like, leave a review, and subscribe to the show so you don't miss the next episode. Thank you a lot, and we'll see you next time.
Thanks.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.